10-year Treasury yields closed at their lowest weekly settle in over a year. So we see Treasury yields pushing lower. Recall we were just above 275 heading to 280. Now we're back going the other way, heading back towards nearing 260 as we close out the week. Now, yes, today's jobs number did not help. It was weaker than expected. However, I do think that the market started to smell something. There was smoke in the market because we started to see yields drift lower midweek ahead of the jobs number. And I think that ultimately the trend here is going to be, again, a push towards lower yields, whether we break below 260, which is, sort of our low since Jan 7th. 260, 280 has been the range. We've threatened both ends of that range, but not really busted through. And I think that we're going to probably see a test of that low end, given the fact that right now with the jobs being maybe a problem, it's maybe a hiccup number, but if jobs are a problem, they have not been a problem going back, I don't know how many years. Jobs have not been the problem. We've had plentiful jobs, and we even over the last year to 2 years, they've been actually very strong. So if we start to see weakness in the job market, that's going to be a real red flag, and yields will go lower very, very quickly. Right now, though, still holding inside of that range. And if you look at market volatility, as we prepare to break outside the range, you would anticipate that volatility would be higher. Well, it isn't. We're actually still below the 14-day moving average in Treasuries. We're actually still trending lower. We're nearing 2019 year-to-date lows. So right now, the market not seemingly fearful of anything as far as a breakout move or a big breakout move, as central banks turn a little more dovish, as the global economy starts to turn south, as expectations maybe start to shift towards lower yields and a weaker economy. How will the other markets react? We're seeing risk assets kind of trade sideways to lower. We're seeing other riskless assets like gold going higher, and I think that right now that is going to continue to be the trend ahead of Brexit. We're going to continue to see Treasury yields go lower. We're going to continue to see gold prices go higher. The dollar will probably trade sideways to lower, and equities maybe have a little bit of downside here, as that is where a lot of cash has been sitting. And lastly, let's look at what we have ahead next week. So we do have some numbers next week. We have inflation data. We get retail sales. I think both of those, unless they're way off the charts, will be overlooked. We have a big Brexit vote on Tuesday. How will that be taken after this week's news with the EU and the UK going back and forth? I think right now that continues to be the $64,000 question, is what's going to happen after Brexit. And of course, we're not going to know that until March 29th. But I think ultimately we get a Fed meeting before that. We do get a Bank of England meeting just ahead of that. There's going to be some back and forth talk, but ultimately, how will the financial markets react to a hard Brexit is what everyone is preparing for. And I think ultimately that is going to be, you're going to see a bid in Treasuries continue, you're going to see a bid in gold continue, and equities will probably be the ones that suffer, but yields likely to continue to push towards the lower band of that range, if not through it, at least as we head into Brexit. And once we get to Brexit, it becomes a new game. Let's not pretend like we know that everything's going to reverse and go back to normal. Things may extend lower. I think there's going to be that type of preparedness. Likewise, we could see maybe a non-event, and after maybe a few days to a week, we start to see things trade back into the normal range, and maybe even the economy starts to pick up, because I think a lot of what we're seeing now between China trade talks and Brexit is a lot of fear, and right now we haven't gotten a lot of resolution. So we need resolution, likely not going to get it until the end of March, but right now, Treasuries testing the low yields and looking like they're going to stay there for quite a while.